Hello, my friends. This is Doug Fabian. Welcome to my weekly ETF report. Today is Thursday, September 3rd, 2015. Thank you for joining me today. Three things I want to talk about. Let's begin with the general health of the U.S. stock market. There is a huge debate going on financial television, financial radio, within websites. Are we entering a new bear market, or is this a correction in an ongoing bull market? And certainly strategy relative to your own portfolio is going to matter if we're in a new bear market or this is just a market correction. So remember that the classic definition of a bear market is a 20% decline. And so far, the S&P 500 is down 7% from its most recent highs. It was down 10% at its worst levels. So we are in no bear market as of today. Now, time is going to tell whether or not this decline develops into a bear market. And so at this particular point in time, let's look at a chart of the S&P 500 and see that we have had a clear trend break. And we're still sitting 5% below the 200-day average on the S&P 500. Following our methodology, the Fabian methodology of trend following, we remain in a cash position and await price action to see what our next move is. Now, certainly, we are going to be prepared to buy back into the market if we break back into a new uptrend. And if we stay below the 200-day average, we're going to remain in a cash position. Next, I want to talk about what I'm going to be doing this Labor Day weekend, which is writing the next issue of Successful ETF Investing. This is my paid newsletter service, and I'm going to spend the majority of this investing newsletter talking about the trading glitches that occurred in exchange-traded funds on August 24th. August 24th was a Monday. There was a lot of negative news out of China. The S&P 500 and the Dow fell sharply in the first few minutes of trading. Many ETFs traded in a bad market, meaning they traded off of their indexes, and some investors really got hurt when they had market orders filled below the actual prices of exchange-traded funds. So what do these glitches mean for ETF investors going forward? I'm going to talk about that in the next issue. I'll certainly be discussing it more in these videos in the months ahead. But let's remember that the first hour of trading is the worst possible time to be making a trade for whether you're buying an ETF or selling an ETF. Second, when markets are fast moving, that's not a time to be executing trades on your accounts either. So I'll have more on that subject in the weeks ahead. But if you're not a subscriber to Successful ETF Investing and you care about what's going on and you want to know the details, I suggest you become a subscriber to our newsletter. Lastly, I want to mention this subject of what's going on in the world and relative to the financial markets. And there is this faith in central banks. And there was a discussion today that Mario Draghi is going to increase the size of QE over in Europe. Japan is doing full QE. The United States is not doing quantitative easing anymore. So one of the things that could lead to a bear market is if we start to see faith erode in the central bankers going forward. Because all of this printed money and all of this debt is not spurring economic growth. And if we don't start to see global economic growth improving, then maybe we are going to slip into a new bear market. Certainly China and the emerging markets are in a new bear market again, but the developed world, the United States, Europe, and Japan are still in a bull market correction. I hope this helps you in your ETF investing endeavors. This is Doug Fabian. Thanks so much for joining me today.